this is Steve Castle with Castle Real Estate Group, and this is the February 2021 market update. In this update, I want to cover the current state of the market, where things are trending, and how to deal with the low supply if you're a buyer or a seller. In addition, I want to cover what we're seeing in the marketplace in terms of creative things buyers are adding into offers, and what to think about if you're a buyer considering those terms or a seller receiving offers with those terms in them. January is typically an exciting time if you're a buyer here in Arizona. With the end of the holiday season, typically we'll see a flood of new homes coming on the market and more inventory for buyers to choose from. This January, however, was nothing like Januaries we've seen in the past. Inventory shrunk an additional 14.5%, bringing the current inventory to the lowest we've ever seen. In fact, it's even lower than we saw Q1 of 2005, which was the previous record low. Lower supply has caused us to see an annualized appreciation of 19% over the previous year, and in just the last month, we're up 3%. We are currently sitting at 4,900 active listings, which is down from 5,600 last month. Just for some perspective, 2 years ago at this time, we were sitting at 19,000 active listings, and that market was still considered a positive and appreciating market. Days of inventory, which we've discussed in the past, is down to a ridiculous 17 days, which equals about 6/10 of 1 month's supply of homes currently on the market. All of these conditions, along with continued low interest rates and continued migration from other parts of the country into Arizona, have caused buyers to look for creative ways to get their offers accepted. So I wanted to cover a few of the things we're currently seeing and what to consider if you're a buyer or a seller looking at one of these options. One of the most common things we're seeing in offers right now is something called an escalation clause. An escalation clause in an offer states that a buyer is willing to pay X amount, say $1,000 or $2,000 over the highest bona fide offer a seller has received. And while these can be effective, there's some things to consider if you're a buyer. First of all, how much are you actually willing to pay for the house? If you have a cap on what you're willing to pay, you may want to consider capping the maximum amount you're willing to pay within the escalation clause. The second thing you have to consider as a buyer is that when we're talking about numbers as big as a purchase of a home, an extra $500 or $1,000 may not be motivating enough for a seller to go ahead and counter your offer. They may just accept the highest offer they have on the table. So you'll want to weigh out, is escalation clause the most effective tool in trying to get your offer accepted? Or are you better off just putting your best foot forward and making your highest and best offer at the time when you're submitting it? As a seller, receiving an offer with an escalation clause can seem like a great thing, and many times it is. But the most important thing is finding a buyer that's committed to purchasing your property. In this frenzy, we're often seeing buyers sending multiple offers out at the same time on multiple properties, just hoping to land one. So before just accepting the highest offer, it's important to do your due diligence as a seller and make sure you're getting the buyer that's really committed to your home. Another common thing we're seeing right now is waiving of the appraisal contingency. What that means is the buyer is electing to say to the seller that in the event the home appraises for less than the agreed upon purchase price, not only are they willing to bring in their down payment, they're also willing to bring in any additional cash they would need in order for the loan to close. And as a seller, that seems like a great thing. However, what we're running into is we're seeing a lot of offers come through with buyers waiving their appraisal contingencies. And as we dig a little deeper, we're finding out that the buyer does not actually have the funds to make up the difference. They're making those offers, hoping that everything's going to come out fine with the appraisal. And at the end of the day, they may not actually be able to perform. So if you get an offer like that as a seller, you want to make sure and do your due diligence and make sure that the buyer can actually waive his appraisal contingency. If you're a buyer and you're considering waiving your appraisal contingency, the most important thing to understand is, in essence, you've made your earnest money go hard in the effect that the home does not appraise. So make sure that you have cash on hand, not only to be able to handle your down payment, but any shortfall that may occur if the home doesn't appraise for the price you agreed. Unless you're a sophisticated buyer with a strong construction background, I would never recommend waiving your inspection contingency. Inspections are great because you get to see under the hood of the house and know exactly what you're getting into with your purchase. So before you consider doing something like this, make sure that you really understand what you're getting into and that you have the cash on hand for any unexpected surprises. Even if you're a really experienced buyer or seller, this market is probably throwing you some curveballs, and you're probably seeing some things you've never seen before when you've done a real estate transaction. So as always, we're here to help however we can. If you have any questions, concerns, or just want to bounce some ideas off of us, please feel free to reach out. We hope that you and yours are staying healthy and safe this year, and that your new year is off to a great start. We'll see you next month.